Welcome back, everyone, to another deep dive. This time, we're looking at Deutsche Telekom stock DTEGY. We've got analyst predictions, financial reports, and independent equity research. And by the end, hopefully, you'll know if this one's right for you.
Yeah, we want to make sure you've got all the info you need on their financials, where they stand in the market, what their future looks like, all that.
So Deutsche Telekom has been publicly traded since 1996, right? They've got a pretty long history in telecom. And one thing that really jumps out is they've been paying dividends consistently ever since their IPO.
Which, says something about how they view their shareholders. And it could be a sign that their financials have been pretty stable over time.
Now, looking at their recent performance, Zacks gives them a sell rating. They're predicting returns will be below average over the next few months.
True, but you got to look at the whole picture. Zacks also gave them strong value and growth scores, so that kind of hints that they might be undervalued right now and that there's potential for some solid growth.
Right, and their overall VGM score from Zacks is an A. That takes into account value, growth, and momentum, so it seems like DTG could work for a bunch of different investor types.
Let's dig into their dividend policy for a sec, because that's got to be a big deal for anyone looking for income from their investments. Deutsche Telekom has a really strong dividend yield, and they've been part of the DivDAX, which is a German high-dividend index, since way back in 2005.
And they're committed to paying out between 40% and 60% of their adjusted earnings per share as dividends. So that's a pretty solid sign for potential investors.
Like in 2023, their dividend was 77 euro cents a share. That was 48% of their adjusted earnings. Oh, and another nice thing, those dividends are tax-free if you're a shareholder in Germany.
Now, on top of the dividends, they also do share buybacks, which is another way they give back to shareholders. Their board decided to buy back up to 2 billion euros worth of shares next year, 2024.
The main reason for that is to balance out the dilution from when they increased their capital earlier. But put that together with their dividend policy, and it's pretty clear they're serious about returning value to their shareholders.
Now, let's switch gears and talk about their innovation pipeline. That's got to be huge for any tech company, especially in an industry that changes as fast as this one. They've got a three-part strategy for innovation: stuff they develop themselves, partnerships, and funding startups.
It's a smart move, lets them work on new stuff in-house while also tapping into outside expertise in whatever new tech is popping up.
For example, they partnered with SK Telecom to make an industry-specific voice model for AI customer service.
Yeah.
That could really boost the customer experience.
And they're working with Google to set an industry standard for moving those eSIMs between devices. That could make things super smooth for people.
Yeah, they're also developing their own smartphones, the T-Phone and T-Phone Pro, working with Google and T-Mobile US on that. It shows they're serious about combining their network with devices to create a whole connected experience.
And beyond all that, they're busy working on future network tech like 6G and quantum communication. That tells you they want to stay ahead of the game.
Speaking of big moves, they made a major acquisition in 2021, buying T-Mobile US shares from SoftBank. Shows how focused they are on growth, and it really cements their position in the US market, which is huge.
Yeah, that was a big one. Really shakes things up globally. Okay, so let's talk about DTG's valuation for a minute. Zacks thinks the stock might be a bit undervalued right now.
And the numbers seem to back that up. When you compare their price-earnings ratio, their price cash flow, and their price sales to the rest of the industry and their competitors, DTG does seem like it could be trading at a discount.
Now, we don't have exact market share numbers from our sources, but there's no doubt Deutsche Telekom is a major player in Europe. They're one of the leading telecom companies over there.
For sure. They're strong in Germany and other European markets. And then you add in their stake in T-Mobile US, which is a big deal in the US market, and they've got a pretty massive reach.
Right. Now, when it comes to ESG, the environmental, social, and governance stuff, we don't have a ton of details, but Deutsche Telekom does put out a corporate responsibility report, so they're definitely thinking about those things. Investors who care about ESG should definitely check that out.
Okay, so let's weigh the pros and cons of owning DTGY stock. What are the good things?
Well, that dividend policy is a big plus. It's strong, it's consistent, and it's especially good for income investors, especially in Germany where they don't have to pay taxes on those dividends.
And then there's that potential for undervaluation that Zacks was talking about. That's a good sign for people looking for value stocks.
Plus, they're putting a lot of effort into innovation. They're developing their own stuff, partnering with others, funding startups. That's a good position to be in for future growth in a fast-moving industry like tech.
And don't forget about those share buybacks. They're actively trying to increase shareholder value, especially when you consider that alongside the dividend policy.
Okay, now, for the potential downsides, Zacks did give them that sell rating, even though it's just for the short term. It's something to keep in mind. There might be some challenges coming up.
The telecom industry is super competitive too, right? There's always pressure from the big guys and new companies popping up.
Exactly. To stay profitable, they'll need to keep adapting and innovating. That's not always easy, especially for a big company like Deutsche Telekom.
Yeah, and even though they're putting in the work, no investment is a sure thing. Deutsche Telekom definitely has its own hurdles to clear. Like, how do they keep up in an industry that's always evolving? They've got to stay ahead of the tech curve and make sure customers are happy.
Absolutely. And being such a big company could make it harder for them to react quickly compared to smaller companies. Plus, any changes in regulations, especially in their main markets, could really mess with their profits.
Right. If you're interested in their commitment to corporate responsibility and those ESG factors, their corporate responsibility report has all the details. You can see exactly what they're doing on the environmental, social, and governance front.
So that brings us to the end of our deep dive into DTEGY. Hopefully, you've got a good understanding of their strengths, their weaknesses, what they're good at, and what their potential is. You should have enough info now to figure out if Deutsche Telekom is a good fit for your own investment goals and how much risk you're comfortable with.
Remember, always do your research before investing, right? It's important to think about your own finances, how much risk you can handle, and how long you want to invest for before making any decisions.
Now let's hear from you guys. What are your thoughts on DTDJ? Did anything stand out to you about the company? Do you think it's a good stock to add to your portfolio? Let us know in the comments.
Yeah, and tell us what other stocks you'd like us to cover in future deep dives. We love hearing from you guys, and we're always excited to explore new investment opportunities together.
And don't forget to hit that subscribe button so you don't miss any of our future deep dives. We'll keep bringing you these in-depth analyses and insights. Happy investing, everyone.